think we should be good, man. We've done this enough times now. I've unmuted myself. I'm on the right thing. Thank you, Austin. Thank you, Paolo. I just never can tell. You know what? You speak and you just hope that thing. There's a little bar that sometimes comes across and tells me if the microphone's working. But you know what? Your fear of you could be talking away, and people are like, "Can't hear you, mate. Can't hear you. Can't hear you." Anyway, right. We're going to get down to the thick of things. Let me just have a little glance who we've got in here. It might be a light attendance today, and I appreciate that it will be. If you're watching the recording, you're very welcome to, of course. So let's scan through who we got. Alana, a few names. Good to see you. Anthony, Anne, Austin, Bob, David, Donna, Gary. Let's pick out a few. George, Hein, Lana, Marinus, Michael, Paolo, Peter, Philippe, Rob, Stephen, Sue, good to see you. Thomas, and there you are again, pal. Wanaku. Have I got your name right this time? Maybe I have. That's the coolest name. You win the coolest name again. Every you're gonna win. You can't compete next week. I know. Good to see you all, guys. Right, let's get cracking and let's get started. So yeah, final webinar of the year. Lots more planned for next year, which I will reveal all in due course. But first of all, I want to thank you for coming to these. I was chatting to a trader the other day, and he was like, you do a lot of these stuff. And I was like, you know what? I'm so fortunate that I love trading. I love talking about trading. I love writing about trading. I was just super fortunate to have found something that, is a real passion of mine very early on in my early 20s. So, it doesn't feel like, I'm doing anything that I wouldn't normally do. I just really enjoy talking about it, enjoy getting your feedback as well, helping other traders getting somewhere, which is great. Enjoy everything about the markets. I just think they're great. Maybe you do too. So anyway, that's a long-winded, non-cheesy way of saying thank you very much for coming to the webinars. Thank you for watching. Appreciate you all. I know time is valuable. You got other things you could be doing, whether you're watching recording, whether you're here live. So appreciate that. I'm going to skim through the markets very, very quickly. In fact, I'm not going to put the screens up, actually. AS is almost at all-time highs. Natural gas is just ripping off for some reason. I've not even looked. As you can tell, I've wound down a little bit. This is my final trading day officially, and then I'll have a little glance probably to see where the close is on Friday, because the US market, don't forget, it's half day tomorrow, Christmas Eve, close Christmas Day, open Boxing Day, and then back into it. Then you've got half day New Year's Eve, you've got New Year's Day off. So it's going to be light, but I'll look. I don't plan on doing anything specific unless something really catches my eye. But it's got to really catch my eye. It's a good time to relax and sort of refresh. And I always let the year sort of marinate in the subconscious, if you like. It's time to kind of reflect and review some stuff. And today, obviously, we're going to talk about this in more detail. But I think it's a good timestamp at the end of the year. Anything else exciting happening today? Of course, the metals are at all-time highs. Of course they are. Why wouldn't silver still be rolling higher and higher and higher? All right, let's get down to it. So today we're talking about the 2026 review, or review of 2025, and how you can take that into 2026. And really, let me just get to the usual parts first, guys. Let me go to the risk disclaimer if my keyboard will connect. There we go. Okay. We're not talking about anything strategy today, but as usual, if you are involved in trading in any way, spread betting, CFD trading, any product that's on leverage or margin, just understand the risks involved with it. You need to work out if it's a product that's right for you, understand the risks, slippage, understand the risk with overnight risk, the gap risk, etc., etc. You know the score by now, but I've got a little, I just want people to know this, right? I just hate hearing stories of people who come in and don't really understand the risks of what they were trading and all that other type of stuff. If you understand the risks and things don't go well for you, then that's just the way it is, and it's part of the journey. One thing to mention, actually, by the way, is before we get started, before I forget, it's a funny time of year. And, I know from sort of personal experience, I know many of you are feeling this, that you're feeling a little bit despondent about what has happened in the previous year. You might think, hang on a second, the P&L is not where I want it to be. And you're feeling a little bit frustrated. Of course, you're an ambitious trader. You want to move forward. You want to have done better. But that's part of the developing trader journey. We spoke to a trader the other day in one of our kind of traders mastermind community calls. By the way, look out for that probably reopening that in January. The trading pods have been super successful. That's by the by. And, you know, he's been trading for a number of years, many, many years, and only really the last 6 months he started to put up some really big numbers. So the point is here, listen, I don't know where you are, you person, in your trading journey, and it can feel frustrating. I get it, I understand, and it can feel like you are making no progress. And especially at the end of the year, you start to question and go, you know, is this really right? Obviously, you make your own decision on stuff, but just know that that's the way it works. It's like there's nothing, and then, you know, things tend to hit a bit of a sweet spot, and it all comes at once, kind of thing. Not for everybody, of course, everyone's different. But you know, the old analogy we have is watering that bamboo plant. You know, you water it under the soil, nothing's happening for ages and ages, and all of a sudden just rockets up. And that's what you're trying to aim for with trading. And that's why, you know, many people fall by the wayside, because they're looking at P&L going, hey, well, I'm not getting the results I think I should. Try and frame it as, well, look at the trader you were 2024. You are a much improved trader now, even if the P&L perhaps doesn't reflect that yet. And that's the thing to focus on. I'm getting ahead of myself. Let's get straight into the stuff of it. Abraham Lincoln, great quote here. Give me 6 hours to chop down a tree, and I'll spend the first 4 sharpening the axe. A little bit of a way to think about going into 26, really. You know, and what I want to cover today is really getting into not overthinking stuff, right? People share things about goal setting, and you know, there's plenty of people out there who are far better equipped and more articulate with that type of thing than me. I'm approaching it from a trader's perspective. I'm also approaching it from a perspective of, you know, I get it. We don't necessarily have hours and hours to go through every trade and to do this and do that. You know, I'm all about the Pareto principle. I want to get you 90% of the results with, I know Pareto's 80-20, but I want to try and get you 90% of the results with, you know, 10% of the work, because I think that you can do that. I'm not saying this to be lazy, but we're allocating resources, right? Many of you trade alongside a job, you've got a family, you've got things going on. You haven't got the time to be sitting there wading through stuff like this is the only thing you do. And I appreciate that. And so we could sit here and talk about you should do this and do that, but in the real world, you're just not going to do it. I know you're not. So let's try and get the low hanging fruit. What's the stuff that you can review? What's the stuff that you can think about, so you don't have to spend ages on it, but actually you're going to get some value from the experience you've had in 25, and you're going to take through a few main points to 26. That's the goal, because, you know, everyone talks about, oh, this you should do that. It never happens, and I get it. So, but if you want to do a big, deep review and spend days and days and days on it, be my guest. But I understand that people don't have that, so I'm going to try and give you something that's impactful with a short amount of time tonight. Okay, so I'm not going to take this too seriously this evening. I say that as a serious business, but you know, I wanted to relax a little bit. I wanted to kind of take some few notes. You know, you don't have to be listening intently. We're not talking about strategy here, talking about mindset. I just want to cover a few things, and if you take a few takeaways that will help you with your review and some sort of focus points for 26, then great. So, and the idea of here is, listen, we're not here to I've changed my tact on this over the years. I would be awful about beating myself up about every single mistake. And maybe you're that trader too, but the trading world is very different from the real world. In the real world, you know, you're not going to make mistakes. You know, analogy, driving a car, you're not going to pull out in front of somebody, because if you do, you're going to have a crash. You're not going to make these mistakes. But in trading, we have such a limited amount of information at any one time that it's very, very easy to make mistakes. And we're so hard on ourselves, because maybe you've got a successful career in the real world. Maybe you're a father, you're a mother, your wife, your husband. You know, you're trying to do the best you can, and mistakes don't happen per se. But in the trading world, it's very different. And I've kind of pivoted from being super hard and driving and like really frustrated to saying, listen, this is a different world we operate in. You can't expect to get everything right. You know, when you reflect on the last year, it's not beating yourself up and, you know, thinking I should have done better, Fine, of course you want to do better. That's why you're here. We're all here for one reason, to try and make as much money as we possibly can with the least amount of risk possible. But depending on where you are on the journey, there's got to be a different thinking about it. This whole, just like the markets, right? They expand in volatility, they contract. I think we can adjust between compression, you know, and compassion, right? Being kind to yourself and saying, hey, listen, it is what it is. You can't do everything perfectly. be easier on yourself. And then occasionally you have to give yourself a bit of a shove and go, come on, you should be doing this pre-market prep. You should be doing this journaling. It's always going to be about that. So systems, not New Year's resolutions. We can go on about that, but there's no point going off topic here. And it's not kind of wishy-washy goals and vague promises that you're kind of going to forget by mid-January. It's one of the things that I used to do, and maybe you've done this, is you kind of really dialed in, you've got all these goals, you write things down, new rules, get straight into the middle of January, and it's all gone. From a training perspective, you're not doing this, you're not doing that. It's much better to think in systems and in terms of standards than it is to think in terms of, this is my goal, I want to do this, I think. And listen, everyone's different, of course they are, but I think that's the same if you go to the gym, right? If you say, listen, I want to put on X pounds of muscle, I want to lose X pounds of body fat, it's good having that goal, but the thing people always say the most important thing to do is, what can you do every day that will help you get there? Well, I'm going to eat this less calories than this. I'm going to make sure I do this amount of exercise per week. That's ultimately going to get you towards the goal, regardless of the ups and downs and the few slip-ups you'll have along the way. Okay, so step one, I want you to look back, right? Before we go to 26, look back at 25. And again, the idea here is to not be so focused on P&L. If you are a trader who is has been green for many years, then P&L becomes the focus point. Okay, it's different, right? You're looking at P&L, you're looking at where the best trades were, where you can make these minor tweaks. But if you are kind of on that hover between green and red, just a bit green, just a bit red, maybe not as really unpleasantly red, then you don't want to be focusing too much on the P&L. I think that's a mistake. I think that that's the wrong metric to look at, especially if we're looking at it through the lens of how can we both be most efficient with our time here and our review time. So we want to ask ourselves a few things. What worked? What didn't work? What felt easy? What felt forced? Now, the reason I say this is that when I speak to many kind of developing traders, and I kind of think of this from my own perspective as well, my own journey, is you have to feel comfortable with, there's no scientific checkbox for this. Fine, your trading strategy and your trading model should be profitable, and that's the whole point. But before you get to that point, or that area, if you like, I don't mind using a different word there. Someone used the word point twice. You need to feel comfortable with it, and only you can tell if you feel comfortable with the strategy. And that's when you're not looking at P&L, you're not looking at performance. You're saying, okay, do I feel comfortable with the strategy? What felt relaxed? I liked coming in and just trading the open. I liked holding trades a little bit longer. I felt anxious when I was, trading around new or whatever it might be, right? And this is just no data to support this. It's how you feel, because you have to be comfortable with you as a trader and your strategy, regardless of the performance yet. I'm a big believer that I think that most strategies can be tweaked to be effective. Yes, there's elements of edge and sprinkle this in here, but you can decide on one way of trading and make it your own. The mistake is obviously hopping back and forth, and we talked about that many times before. So what worked, what clearly didn't? These are simple questions. We're not going into too much depth here. Okay, now this is a really simple exercise, and it won't take you long. And again, we're trying to give you stuff that's going to help you move the needle without bogging you down and making you feel. And also the worst thing is you feel guilt. I've been there. You read this stuff like you should be doing this, writing all this down, analyzing this, doing that, and then you end up just feeling guilt because you've not done it. You've not had a chance to do it. You've got other stuff going on. So this is a 20-minute, 30-minute, hour, a couple of hours max exercise, and then if you have time to do more, great, do more. So here's what I think is worth doing. Look at your top 3 best trades. If you're a day trader, that might be the best days. It might be the best weeks. Top 3. So if you're a swing trader, position trader, your best 3 ideas, for the year. If you're a day trader, maybe it's the best weeks. Maybe it's just 3 of something, right? Just 3. And then your worst. So your worst trades, your worst days, your worst weeks. Forget about all the other stuff. Just pick those off, and you can go back through your blotters to look for that. You maybe have a journal, maybe you know in your head what it was. And this is going to give you a really good head start into 26, because the idea here is we're trying to improve what was the best, and we're trying to reduce what was the very worst. And the middle will sort itself out. And because the brain, as well, I've realized this, is that, and you may have too, we can't give it too much to focus on. If you write all these rules down, you've got these post-it notes, nothing ever gets done. Whereas if you say, hey, This is what I'm working towards. This is what I'm moving against, i.e. the worst trades or the worst sequences. You've had the worst days, worst weeks. These are the best. Your brain can go, okay, I get where this guy wants me to go. And these are the characteristics that I'm trying to improve to get me away from this and towards this. That alone could just be enough to move the needle in the right direction for you. So when you can, your top 3 best trades, your bottom 3 worst trades, for many of you that might be days or maybe weeks, depending what time frame you're trading. And obviously you understand it depends on the frequency of trade, time frame, etc., etc. Now, once you've done that and you've gone through the best things, and by the way, let me just go back a second. What you're trying to do here is you're trying to find the characteristics, whether it's you, whether it's the market conditions, whether it's the trade you took, anything that you say, hey, you know what, this was a perfect environment for trading for me. It was a one-way street and I was aligned with it. Or, it was a heightened volatility, or it was a crush volatility, or it was, whatever it was. So there's a market condition. Then what was your performance before? And so what you're trying to do is replicate and duplicate the stuff that worked. And then there's the worst 3. Was that because you were trying to trade breakouts in a choppy environment? Were you trying to trade after a drawdown? Were you trying to recover after drawdown? Whatever it is, you get the idea of this. The point is we're trying to pick the best and the worst and trying to find that common thread that runs between those. Okay, so I guess this slide perhaps could have been earlier on, but try and find the positives. And I get it. If it felt like there weren't many positives to take away from the year, there will have been some. And one way to kind of do this is to imagine that you're mentoring yourself. Imagine you're a head trader and you come in through the door asking for help. Now, most of you aren't going to tell him to sod off and get out of there. You say, okay, listen, mate, Ryan, you had a red year, it wasn't great. Let's sit down, let's see the positives. And if you wrap it from that perspective, we're so much more compassionate when it comes to someone else asking for help than we are ourselves. And that just little reframe can help you find some of the positives from your performance, even if it wasn't as good as it could be, right? So maybe you are good at cutting losers quickly, even if it was a death by 1,000 cuts and you felt like you got stopped out so much. Well, at least you have that, right? Maybe the stop is wrong. There's something to work on. Maybe it's too tight. Maybe get pinged out on noise. Great trades are just getting pinged out and then it's going your way. Maybe so, but at least you're cutting your losers quick. You're doing it quickly. And maybe you weren't over aggressive with position sizing. Maybe you're quite good at staying out of bad environments. You get the idea, right? Your job here is to find at least 4 positives from a trading, even if it wasn't so great. So that might be a course you're analyzing, might be the whole year. And again, depending on where you are in your trading, if you've had a breakout year and it's been fantastic, super. It's going to be easy to find a positive. So you still do the same exercise. The point is you can do this regardless of the P&L. I want you to unlock yourself from the shackles of P&L and start thinking in terms of progress and say, hey, you know what, these are the positives, right? Even though it wasn't a great year and I kind of really felt like I should have done better, these are the positives I can build on. Now, yes, I need to make adjustments. I need to do other things as well as that, but I'm not the same trader I was last year. I've made progress in these areas. Okay, a word about missed trades, because this is important. Now, a lot of traders beat themselves up for missing a trade. And I think there's 2 camps we can sit in here. One is you missed it because you were poorly prepared, and that's an operational adjustment. Number 2 is you missed it because there's no way you were getting it. Some traders say, oh, I missed this yen pop. It's like, mate, it was 3 o'clock in the morning. You ain't up at 3 o'clock in the morning. There's no way you're getting that. You didn't miss it. It happened when you were asleep. Unless you're going to suddenly change your sleeping schedule just in case the yen pops in the middle of the night, you ain't going to do it. So this compassion, don't beat yourself up for missing a trade. There's no chance you could take it. If you're at work and you're unable to get to the screen, it's not a missed trade. You never could got on it. However, if it's a swing trade, perhaps you're not prepared, you haven't set alerts, you're not coming to the screen at the end of the evening to do your checks, whatever it might be, then yeah, it is a missed trade. And then you adjust your operational side of stuff. One thing I noticed for a lot of traders who have other stuff going on, and I know a lot of you have, who are, watching this, you've got other jobs, you've got other commitments, able to sit in front of the screens when you want to, and I get that. There's that guilt of missing stuff, but there's also perhaps more you could be doing from an operational perspective to make sure those good trades are brought to you. You don't have the time to sit there browsing through charts and go, oh, natural gas is up 11% today. Oh, look at that. You don't have that time. So is it important to you that alert to set up and this automation type thing that brings trades to your attention? Do you just need to spend 15 minutes at the end of the night, scrolling through with an objective of, okay, I'm trying to find stuff that matches this pattern? There's often a little unlock there that can bring the trades to you. Do you need to be better prepared for your day trading stints? There's operational considerations here that you can make adjustments for to improve your performance, but not getting them confused for, hey, that was there when I was that move when I wasn't even able to take the trade. There's a difference. I know you get this, but I see many traders beating themselves up for stuff they just can't control. And so rather than going, oh, I just can't get on this, get on that, we'll control what you can control. Solve Forex. You're an entrepreneur. You're a trader. You're taking risk-based decisions. You solve with the resources you have in front of you. If you have a limited amount of time, work with that. Limited amount of resources, work with that. Find a way with what you have rather than saying, if I had more, if I had a bigger account, if I had more time at the screen. You don't. So accept that and reframe and go into 26 saying, this is what I've got. This is how I'm approaching things. This is how I'm going to deal with the resources I have and get to where I want to be with what I have in front of me. Okay, another thing is, well, it's the same topic actually, isn't it? Fix the system, not yourself. If you miss trades, can you change your process? Things I should probably add to that is alerts. We talked about that. One thing that actually I notice is many traders say, oh, I missed that, didn't have that, I didn't get on that, I didn't do this. And then my question is always, okay, but have you got a trigger for that? Have you got a filter and trigger process? And not to go too deep into this, we've covered this many times before, but does your process bring it to your attention? Oh, I like that bull flag. I like to trade bull flags. This process helps me get the bull flags from my universal markets to my attention. But have you then got a trigger? Have you got a way, okay, I'm buying a little dip below the low and a pin bar, I'm buying a breakout. What is it? And if you didn't pull the trigger, then it's more of a psychological issue than it is a strategic issue. But if you don't have a trigger, you can't say it's a missed trade because you've got no reason to take it, right? So think about your process and think about when you go back and do the review, and you look at your best days, your worst days, and try and pick the positives. Say, hang on, am I saying I've missed this and I should have had this and I took this? But are you clear on your process? It doesn't take much to sharpen it up a bit. But sometimes, we say, oh, I missed that, but we don't actually have a reason to take it. And we're expecting ourselves to do a lot of work and mental processing and cognitive load in the heat of the moment, as opposed to saying, hey, I always take bull flags that are extended by this. Okay, now the final part is whether I take it on the breakout or I take it on the dip if I'm at the screen. That's it. Sometimes people are spreading themselves too thin, too many markets, too many strategies, trading in too much of an unclear time window. This is a system issue rather than discipline issue. And I think people confuse the two and say, oh, I'm hesitating on taking a trade, or, I'm missing. It's like, okay, yeah, but if you don't have a process for taking that trade, you can't expect yourself to get it. There's no way you're going to get the opening drive if you don't have a way to get on the opening drive. Are you taking the orb under certain conditions? I think that first pullback trade, the high type flag, you have to be more precise about getting on the stuff that's made you money last year. Those 3 biggest days, biggest weeks, biggest trades, whatever. How can you do more of those? How can you be more systematic about bringing those to your attention? That's so important. How can you be more systematic about getting the size on that you want? How can you be more systematic about different types of triggers and being really, really on point and locked in when the conditions are right, when you see the stuff that you're good at, and vice versa as well, making sure that you have a system in place and a process in place to avoid some of the crap stuff. Okay, I'm getting sucked into that. Okay, there's got to be a filter that says ADR below this, ATR below this. I'm not interested. ADX, ADR, ATR, same type of thing. Get the idea. I don't want to get involved in that. So again, just think about fine-tuning the process, not reams of if this, then this. No. Main stuff that's positive, main stuff that's negative. How can I adjust my system or operational perspective to do more of that and less of that? That's a really good way to do stuff. Okay. So what actually made you money last year? Be brutally honest here. Where did your good performance come from? So when you take those 3 days or 3 weeks, whatever it might be, this is when you drill in and you say, right, what's the time frame I'm trading on? Am I being living in a bit of a dream world here and thinking I'm a bit of a swashbuckling scalper when actually I'm pretty dog crap at scalping. You know, you got to be honest with yourself. Are you here for entertainment or are you here to make progress? If you're here for entertainment, that's fine as long as you're honest with yourself. But I don't think you are. I think you're here to make progress. So this is when this brutal honesty comes in and you say to yourself, hang on a second, I'm actually better if I hold trades a little bit longer. I'm actually better on the higher time frames, or vice versa. It doesn't matter which way it is. I don't care either way, but the honesty with yourself and also the market. And, you know, some people go, oh yeah, well, I like to be a forex scalper and this. And actually, you know what? You look at your performance, and the forex was the worst for you, but you've just got this illusion in your mind that that was the market that you trade, and that's the market you're good at. When you look at the numbers, you go, do you know what? It's just distracting me, that stuff. I should be trading this stuff, or maybe it's the other way around. Again, it doesn't actually matter, but this is where just these real basic questions you can ask yourself can highlight some good stuff and bad stuff. Types of setup. I know many of you perhaps don't track the setups as you should, and that's probably something to consider for 26, being a little bit more granular with how you mark your trades and how you label them so that you can have better a review process, you know, at each quarter or whatever it might be. But you also know as well, like, are you better trading counter trend stuff like the flushes and exhaustions? Are you better trading, you know, mean reversion? You know this, and you can probably see the data to back this up. Time of day, holding period, etc. This now forms your foundation for the year ahead, and this is important. Many traders live in this world where they think they're good at something, when actually, when you look at the data, it shows a different picture. Just trust me on this and go and look at your data. Again, I'm not saying dig into every bloody tick out there, you'll be there forever, but just if you can just use it, if you export it out into Excel or you put it into a trading journal, whatever hell you use, very easy these days, checking ChatGPT for all I care, very easy to kind of get some insights into what you're reasonably good at and what you're not reasonably good at. And you might say, you know what, if I hadn't traded that market, or you might say this is interesting. You might say that market I've really not done very well at last year. I thought I was better than I was, but those couple of days I just got caught out. And then you go, okay, what the P&L look like if I hadn't traded the DAX in the first opening session, for example? And you look at the numbers and you go, well, geez, you know, wow. Okay, so that's my low-hanging fruit. I need to probably be very aware that I shouldn't be trading that market in that time period. Because look at the performance speaks for itself, and it's a year's worth of performance. Not like it's got some luck involved in it or bad luck. It's showing me the data. I'm probably not very good at that. Why don't I focus on becoming better at what I'm better at? You know, and that's the thing that, you know, many traders focus on becoming a better trader. Good, that's the starting point, but there's so many more steps to that. Okay, how do I become a better afternoon breakout trader? How do I become a better 1 to 3 day swing trader? How do I become better at scalping that gap fill, whatever it might be? But that's where we can get good. We can't compete in the arena with all the big guys. They're so, you know, we are under-resourced, under-capitalized, under-IQ'd. We're just one trader swimming in this sea. So we have to specialize. We have to become experts at stuff. And that's how we become better, rather than just becoming a good trader and saying, I want to hold my trades longer, I've got to size up. It's no. How can I become good at the stuff that I know I've already got some form of affinity with and some sort of proof that actually that's quite good? And going back to the kind of earlier slide before, if you've struggled in the year, there will still be some threads in there that you can take and go, hey, you know what? Look at that, man. I only traded that market a couple of times, but I seem to have a feel for it. How can I build on that? And this is how you build your own edge. It's how you carve out your individual process and model, by looking at some of the results you've been trading. All right, you've got it there, the evidence is there, and then you can start to test it out and go, what if I strip that out? What if I only took longs? What if I only took shorts? What if I only traded between these hours? And you can see the change in actual results rather than guessing and going, I think I'll do better if I did this. And that's so powerful for the logic part of the brain. Okay, so just as a side note, I think the environment shifted, right? I've observed this year, and I talked to Peter about this, that a lot of the textbook patterns have not worked as consistently, and that, in a way, that's good, because this is how the markets always evolve, right? You know, we had the turtle traders who would buy the, I want to say 60-day breakout, 120-day breakout, and that was profitable strategy. That failed ages ago, and hence Linda Rashke came up with the kind of turtle soup idea, and then that was profitable, and then someone else nicked it, and blah blah blah. I think a lot of these patterns are like, so the textbook stuff has shifted in terms of how it develops. So very often you're getting these traps now. Very often the higher time frame context is pulling the market in the direction, and especially last year or this year, fewer trades, being more selective about stuff has paid off much better. Patience, of course, always pays off. Letting things kind of mature and develop before you pull the trigger, not chasing stuff. And these are my observations, but maybe there's some observations you've had and something that has stood you the test of time. Maybe it's not holding true. And this is where we have to kind of decouple ourselves from our beliefs. Like you might think, oh, these, high tight flags are working great. Well, maybe they do, but under certain conditions now. Maybe they're not working as well. Maybe they're not giving you that 3R you want. Maybe 1R is what you've got to be content with. This is the type of stuff that really separates your traders who are accelerating away and kind of doing great things, and those who are kind of still stagnating, of like, okay, how have the markets changed? How have they adapted? How do I need to adapt for these conditions? Are we is there an edge, kind of much more of an overnight edge now? Do I need to be trading before the open? Is that where the edge is? It used to be the open, now it's this. Just making that little assessment of the markets you trade and the style you trade, and say, hey, has there been an environmental shift? Because what you don't want to be is too late to the party. You don't want to be doing stuff that worked last year in 24 and 23. You want to be doing stuff that's working now and not worrying about, and people back testing and stuff. That's fine if that's your thing, but just go with what's working now. If you're a discretionary trader, you can be focused and locked in and dialed in about, hey, this seems to be working. I'm going to trade this. It won't be in a textbook yet. It won't be this. It'll be a slight little quirk on a pattern that maybe is sitting there. It'll still be supply demand shift, but there'll be these little tiny changes of stuff, and that's for you to decide, for you to kind of observe and then bring those into your trading. All right, so let's go back. Think in terms of themes and standards. Okay, we talked about taking the stuff from 25 and the best things and trying to scrap the worst things and put those into 26. So how do we do that? How do we decide what to focus on? Well, just as I said at the beginning, I'm a big advocate of thinking in terms of themes and standards. You can control your behavior and standards. Again, the analogy, if someone going to the gym to gain muscle, lose weight, lose body fat, whatever it might be. But these are things you can control. You can't say, I want to make X per week, I want to make X per quarter, whatever it might be. But you can say, okay, my standard needs to be higher when it comes to pre-market prep. I need to be more precise with my execution quality. I must wait for this. And these are the themes, as opposed to kind of these goals that you're writing out. And most people go, I want to do this, 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 and this. I want to make this much. I want to do this. That won't be effective. It's much more effective to say, okay, listen, my big theme for the January is going to be patience, because the brain is so much better at kind of bringing you stuff. And that means this. It doesn't mean this. Working on that one thing at a time, that one theme for the month, raising your standard when it comes to patience, and then you become a more patient trader. And the next month you say, hey, I want to be more precise with my entries. I'm a little bit this. What does that mean? It means doing more of this, and this. Okay, I want to raise my standard with that. The discipline, the pre-market, whatever it might be, right? This is the much better to plan out what you're going to do in terms of the theme and the one thing to focus on, because it's so much better if you can focus on one thing at a time and become improving that, raising your standard, then do the next, then do the next, then do the next. Otherwise you spin your wheels for another 6 months. You look back and go, I've not really got much better. I've made a little bit of progress here and there, but everything is still falling a bit short. Much better to be 4 months in and go, well, you know what, I'm way better there. I've just got to lock in on a couple more things, and that's really going to really unlock a lot of progress for me. Okay, so working backwards. So let's say your theme is improved discipline. Just as I said, what does that actually look like for you? So once you've done your your best trades, your worst trades. You've identified the theme that you do, the one big domino I talk about. Hey, what's the one thing in January you can work towards? It's not a goal, it's a theme, it's a standard that you're elevating. How do you get to that goal of raising the standard in discipline, for example? Is it fewer trades? How? Why? When? This is when the operational stuff comes in. You need to be better, putting a stop in the right place. Do you need to walk away earlier? And what habits you need to build to make that happen. This is how you become a great trader, is by stacking these habits little bit, compounding that growth and building on blocks that are already robust. Too many people try to build stuff very, very quickly, and it's so shaky, and then one little drawdown wobble and they're back to square one. No strategy, no confidence, discipline shot, this, that, and the other. It's okay. What is the theme that I'm trying to focus on in the first month of the year? What maybe do I want to focus after that, and build those blocks, steadily, rather than everything in parallel, just this serial nature of this block, but working backwards from what that looks like to you and what those high standards look like. Remembering that habits are far better than targets. Just like I said before, if your habit is I'm going to eat fewer calories, I'm going to work out 3 times a week, 5 times a week, whatever it is, that's going to get you that lower body fat or that increased muscle. If you're going to, whatever, you get a point. The idea here is that targets really motivate you, but not for long. You go, imagine if I could make this much money and I could do this and do that, and it just falls by the wayside. Versus if you can build the habits, again, by looking back on 25 and reminding you of this, you go back, you look at the stuff that's worked well. How do I do more of that? How do I mirror some of the best behavior I've had, even if it was only short? How do I get rid of some of the stuff that really didn't serve me, the top and the bottom chunk? What habits will I need to really get better at this? Okay, maybe I need to get more into the habit of reviewing a little bit more, carefully, a little bit more deeply. Maybe I need to get into the habit of not rushing in on it might be some simple things, some simple operational considerations, but it's what do you do daily? What do you do weekly? What do you do, monthly? What do you review? And reminding yourself, actually, the big shift for you is going to be in 26 is going to be if you can elevate your standards through habits in those different pockets of areas that are going to serve you the best in your trading. That's how you get the breakthroughs, not with this overanalyzing, not with this, okay, my lofty goal. And by the way, I'm all for having a future vision of where you're headed as a trader. Where do you want to be this time next year? What do you want to be talking about? Put some numbers on there if you want in your mind. Absolutely. But that's not enough, I don't think, to get you there. It's all very well, but your brain goes, well, how? And sometimes it might end up doing a stupid trade with big size, get things, well, he wants me to make this much money. That's the only way I can do it. No. So you have to program your progress and say, well, this is how. I don't know, talk about, I'll assume I'll work it out when I get nearer there. But to get to the first point, I need to deal with this because this is going to serve me. And this has not been serving me based on previous year's performance. Okay, raise that theme, raise that standard, then go back and go even drill down to what habits do I need to be able to elevate myself there, to elevate the standard, to build that foundation up. And this is kind of another thing I wanted to add here is that also being very honest about how much time you've actually got for this. I understand that you're super ambitious. I understand that you want this and you do whatever it takes to get there, and maybe you've had success in other areas of life as well. That's great. But also being realistic about what you can achieve with the time you have, especially apt for traders who have other commitments. You don't have the luxury of time, but it doesn't matter. It just means you have to be more precise about where you allocate resources. Maybe you have a couple of hours a day. Maybe you have 15 minutes. Who knows, right? Only you know the answers to that. But going back to the webinar I did about your part-time traders and stuff, one of the biggest downfalls, without any question, for part-time traders is trying to do too much with the resources they have and feeling flustered, feeling frustrated, feeling guilty, and getting nowhere. That is absolutely the number one thing that really upsets and derails, is a better word, part-time traders. But the traders who do have other commitments, do have stuff going, who say, listen, and this is something I do if I'm working with a trader, I say, listen, we've got to sit down and work out what you have. You don't have this, fine, that's fine. You can't get to the screen, that's fine. Let's work, what do you have? Okay, well, I've got a little window here every day, or I've got a, okay, fine, let's work back from that. And I know I've said this before in the webinar, but it's so important, man. It's so important. You've got all this knowledge and skills and experience, but you're screwing it up because you're trying to do so much and say, oh, well, I want to do this and I want to do that. And then nothing gets done and you just go spinning your wheels. Just be really honest about the time you've got and the resources you've got, and say, hey, I've got evenings, or you know what, I have an occasional day, or whatever it might be, right? And the idea then is you design the trading around the reality of your life. If that's one thing you can take away from this, because I know I see this so often with traders who have other commitments, is, you know, just being honest about the resources you have in terms of time and designing your strategy around that. It pains me when I see traders, you know, trying to say day trade and they're getting frustrated because they're on a Zoom call, they're on a commute, they're at work, they're like, oh, I missed this big move. It's like, yeah, but you never, it's always going to be like that. Until that day comes where you want to pack in the job, it's always going to be like that. You have to say, well, you know what, I can't be doing that. I can't trade in that style. And that might mean that you flip everything on its head. That might mean you say, you know what, maybe it's time for me to consider position trading here. Maybe it's time for me to consider, you know, this window of operational hours other than this. Maybe it's time to rewrite the rule book for me, because I'm just doing the same thing, and all I'm doing is creating anxiety, frustration, and, you know, just giving my money away to the market. You don't want to be doing that. So, you know, something to really think about if you're in this position is, what time can you truly dedicate to the market? It's all very well me sitting here and saying, oh yeah, you do this and do this and do that. You know, someone who's got the luxury and ability to sit in front of the screens if I want to, for as long as I want during a trading day. But you know, real world is, that's not the case for many of you. So, you know, and that's fine. You can still do it, but just being honest about that. Okay, so these think in terms of systems, right? So 26. We talked about these themes and these kind of different areas. There's also operational side of stuff, and it might seem a bit glib, I get it, but maybe your watch list needs to be reduced, maybe it needs to be increased, and this all comes from the North Star of trying to do more of what works and less of what doesn't. So if you're trying to maybe catch a specific pattern, do you need to widen the net? Are you going to become a specialist at the setup as opposed to the market? Maybe you've been focusing on the DAX and the DAX has not been serving you. Like, hey, I'm a DAX trader. Or maybe you're better off trading breakout type trades on any market. You know, and so maybe your watch list needs to be expanded. Maybe it needs to be shrunk down. Maybe you need to become more of an expert in an asset. You go, hey, you know what? I go where the volatility is. I've become a silver trader the last quarter because that's where the action is, or whatever it might be. There might be an adjustment there that you're so used to doing that needs an overhaul. So I know it sounds like simple, overhaul your watch list, but we get so we have this dichotomy, don't we, as traders, of must keep grinding, must keep moving forward, have to crack this nut, and I don't want to change anything. I need to I kind of want to keep exactly what I'm doing, and I can't really flip flop around. But sometimes making a considered pivot is exactly the right thing to do. You know, maybe you need to refresh your strategy playbook. You know, again, it comes back from what's working, what's not. Do you need to be a little bit more on point with alerts? And you know, alerts seems the most mundane thing in the world, but if you're trying to alert yourself to specific strategies, specific patterns, then getting good with alerts is going to do it, especially if you don't have the time to sit in front of the screen, or you don't want to sit in front of the screen. You're journaling, you review questions, all these little things, like they might seem so mundane, they might seem so dull, they might seem pointless, but they're not, because this is this little adjustments that can really make your life a hell of a lot easier. Okay, so thinking in terms of one strategic adjustment, just like I said before, and I really believe this, honestly, I really do, is if you try and overhaul everything, you just get nowhere. It's just picking the one thing. You know, what are you trying to do? You're trying to get better higher time frame buys, trying to get better exits. You know, what is it? And just that compound, right? I do this, I do this, I do this, I do this, being methodical. That's far better to do that and work your way towards the goal than it is to have that big goal and just stamp it right in front of you and just go, geez, all right, I'm going to climb Mount Everest starting now. No. Okay, fine, I'm going to get to there, but I need to do this first, then this, then this. It becomes way easier and more measurable. A little word on mindset without the kind of fluffy stuff. You know, mindset. You know, I don't believe you can sit in front of the mirror, stand in front of the mirror, and go, I'm a great trader, I'm a great trader, I'm a great trader. Maybe it works for you. If that's great, then brilliant. But I just don't think it's like that. I think it's more about building trust in yourself, sticking to your word, accepting that you're making a risk-based decision without all the information there. That's why the decision is there. That's why there's alpha to be generated. It's building the confidence and accepting where you are. I talk about this, the Stockdale paradox often. Accepting where you are, being brutally honest. I'm not where I want to be. The performance hasn't been great if I look at that. However, I'm really optimistic about the future because I'm putting, and the extra thing I would say there is because I'm putting these steps in place to get me to where I want to be. That is the mindset stuff. And fine, visualization I think is fantastic. Affirmations, I think they're useful. Don't get me wrong, I do. But you have to build your own quiet confidence and your own trust in yourself and your process and your ability to not do damage to your account. This is where you build, something that's really got a strong armor and it really helps with your mindset. Okay, so let's move to January. January is a time where traders often go, oh my God, I've absolutely messed up. I came in with such enthusiasm and this, that, the other. Let's not worry about January. If you think about your theme that you're trying to do better at in January, taken from the data you've got from 25 and the good stuff and the bad stuff, you get your theme. You're not trying to smash it out of the park in January. So many traders coming and this is my month, and then they just kind of do some damage and they're back to square one or worse. Like you just want to kind of just get into the swing of things, be intentional about what you're trying to improve. You don't worry about the P&L. If you're trying to build discipline, the P&L doesn't come into it. Okay, I'm trying to take 2 trades a day. I'm trying not to overtrade. This means this, this, and this. And being specific about the stuff you can control. And you can win January then, regardless of your performance. Because if you work on a theme and you have the habits that are setting and you're trying to elevate those standards, it becomes so much easier. So many average traders out there and so many of the mob and the crowd are trying to make money straight off the bat. And I want a really good head start to January because I feel great and want to get back into the thick of it right away. And it just never works like that. You're far better just to build up the pressure slowly, try and get into the habit of making progress in the one theme you're working on based on the data, bring that up to speed, then February, then, do that. All of a sudden, things become so much easier, so much calmer. Okay, so final thought. The goal for 26 isn't to kind of make more money. It isn't to be smarter about stuff. It's just to be more intentional. It should be to be calmer. It should be to make fewer mistakes in line with the mistakes that you kind of have identified that really don't serve you. Let good trades work. I.e., what are the handful of trades or days or weeks, more of that, less of that. What are the themes I need to work on step by step to get me to more of that and less of that? And what are the operational things within those themes that I need to do each day to help me move forward? You see, this isn't massive digging down into loads of stuff. And it's, again, you're going to find the patterns and you're going to find, setups and stuff within that review. And you're going to say, but it's being more intentional about how you find those, the operational side of stuff, the mindset side of it, and really figuring out where to apply the resources. We've got limited resources. And so our job is to really focus it on the area that matters and not kind of swing the bat and try and do everything at once. If you do that, it won't take you long to do it. It's very simple to do, but it can give you a real kind of track because you're trying to look at 26. Imagine a jungle here. And you just want to start hacking away at a track. And we're going to be hacking away mindlessly. Like, listen, I'm going to go on this heading and I'm just going to keep going. I don't know when I'm going to get through to clearing, but I'm just going to keep hacking away. And at some point you get into a clearing and go, okay, great. I feel better now. My discipline's better. Or I'm really dialed in my strategy and my triggers and stuff. And I feel like I'm more comfortable with missing trades because I wasn't there. All this stuff. And then you go again and you go again. It's far better doing that than just going full force and round in circles. And that's how you kind of really build, I think, progress for 26, starting on the front foot and, really making it a decent year. Okay, hope that's helped. I think it's a great time to reflect. It's a great time to do this type of stuff. But don't overburden yourself with trying to perform in January, because I think that really makes a mess. Picking the one thing to improve, the biggest domino, using data to back that up and support why you're doing that, and doing it in your own way. Like, you're your own trader. Like, I can stand here and say that I think this was effective, but you've got to find your own way, and don't necessarily be, oh, I feel guilty about not doing this and this and that. It's like, hey, well, I just want to try and improve this bit and this bit and this bit, and I know that that's going to help me because I've got the evidence from 25 to support that. Okay, if you have any questions, guys, I will take them. There's a few in here. Anne says, I wanted to say thank you for webinars this year. I missed this one, Anne. Sorry. Yeah, I want to say thank you for the webinars this year, and also thanks for the binaural beats. I listen to them all the time when I'm trading. So good. Merry Christmas. Merry Christmas to you. Gary says, great point regarding missed trades. Thanks so much for doing these all year long. Have a great holiday season, New Year. Yeah, if you got to go, guys, and thank you for your wishes about Christmas and New Year. Same to you. Hopefully you have a enjoyable Christmas with your friends, with your family. Whatever you're doing, don't eat too much turkey. We're back in the new year, hitting stuff as it with full force, but in the direction of trying to just get better at the one things at a time. Because of work, I missed a couple of webinars. Lana says this. Could you kind of let me know where I can find the recordings? Pepperstone should send out the recordings. If not, eventually they put them on. What do they put them on their YouTube channel? But I think they're unlisted, so you can't find them. If you register, they should send you the recordings, Lana. Eventually, I put them on Traders Mastermind websites, where if you're in the webinars section. Slight delay on that, but there's a way you can catch up with the ones you haven't managed to catch live. What is a good set of goals for a trader that is finding consistency? Ricardo. Oh, yeah, okay, great. So if you are green and you're finding consistency, that's when you want to dig into, okay, what's my win rate? What's my RVR? The traditional metrics, right? What's my maximum adverse excursion, maximum favorable excursion? This is the really granular stuff, the operational stuff that is good if you're green. And you go, okay, which lever do I need to pull to kind of make the most? If your win rate is quite high, you can push that more, but how's that really going to affect stuff? Maybe you need to boost the RVR, so your average win versus your average loss, you actual over the year. And you go, okay, if I can just hold trades a little bit longer or add an extra clip, where do I need to apply to get that incremental improvement? This is where you kind of look at that picture and say, yeah, I'm already doing pretty well on this. This is my weaker spot. Let me apply some pressure here. How do I go about that? Do I need to does my strategy and does my blotter support holding stuff a little bit longer? Do I hold stuff too long? Is my maximum favorable excursion way more than my actual close position? That's when the data really can help you out, Ricardo. And then you go, okay, well, actually, you know what? I'm holding trades a little bit too long because my MFE is super high compared to what I close at. If I'm just a little bit sharper about my exit, that will improve my average win rate. My average win versus average loss in financial terms. That would do X to my bottom line. That's where I'm going to attack in Q1. I'm going to attack that. Or maybe it's your win rate. You know what? You're throwing money away by taking substandard trades. If I just looked at my bottom 10%, how do I create a filter to get me away from that stuff? Okay, imagine now I halve those worst 10% trades. That would improve my win rate, improve this. That is the only thing I need to focus on moving forward for Q1, is just trying to reduce the stuff that's doing the damage. And so it's that, again, it's the same focus regardless of where you are, P&L, but it's just a little bit different. If you've had some progress and things are working, you go, okay, let me look at the weak spots and which lever to pull. Again, not spreading yourself too thin, but that's super effective. And also maybe for you, Ricardo, depending on where you are, the task might be for 26 more size. Personal decision, risk-based decision is always up to you. But I'd say as a trader, it's like if this stuff's working and you've got proven some consistency, you want to do more of that. And you're not here to kind of, just poodle along. If you found something that's working, and then very personal thing, you'll be careful what I say. I'm a fan of throttle down. Anyway, thank you, Ricardo. Good question. And Merry Christmas to you too. Rowie says, dear Mark, thank you for an amazing year. I've learned a lot from you this year and got better than a year ago. Good for you, Rowie. I appreciate everything. Happy New Year to you too, pal. Good. If you just made a better progress, you just keep moving that block forward a little bit more. Just keep moving forward, man. It's inevitable. If you just keep moving forward, it's inevitable. You know, there's a great analogy years ago that I heard about the kind of inevitability of water hitting a rock. You know, water hitting a rock doesn't do anything over the first couple of times. A wave's hitting a rock. Yeah, but after, you know, enough times, eventually the rock starts to erode. It starts to crumble. You know, so yeah, not the best analogy. But you get the point. It's like if you just that pursuit of excellence, the pursuit of I just want to do the right thing, the same thing, the same thing. Eventually, the rock crumbles. You don't know when it's going to crumble, but eventually it does. And it's the same with training. It's like, okay, just keep the effort, put the effort in, put it in the concentrated spot. You know, I think nature rewards that. I think the universe rewards that, if you want to think of it that way. The concentrated effort you've got, resource you've got in one spot to get the breakthrough, and other things tend to fall into line. Dennis, thanks for a great year. Appreciate you, Dennis. Thank you. Merry Christmas, Lana. Thank you. Merry Christmas to you too, Thomas. Ricardo, glad you liked that. Marinus, thank you, Mark. I find your webinars are very helpful. Looking forward to many more. Have a great Christmas and wonderful New Year's. You too, Marinus. Merry Christmas to you too, Panos. I think that's it. Merry Christmas to all of you as well. You have an opportunity to type in. Appreciate you. Appreciate you all. Have a good New Year. Have a good Christmas. We're back again with these. With any luck in the new year, I will send out an itinerary for you as soon as I can. And I look forward to seeing you in January. Take care, guys. Bye-bye.